I'm going to do 30 seconds of nerdiness, okay? I always do this, explain it.
You've got the right crowd here.
Can you explain how you get the leverage briefly? I mean, we usually say, oh, they use futures and swaps and options, but for example, how does a 3X semiconductor actually get that?
Yeah, I mean, you brought it up, and we'll be nerdy for just a few seconds here.
30
seconds tops, okay. All of our ETFs that are using leverage, we do it through the form of what's called a swap. So you're basically going to an institution, a bank, and you're saying, hey, I want you to give me back the performance of 3X semiconductors for 1 day. And the swap is intricate, there's money movement, there's collateral, there's things to make sure that it's safe and done through clearing. But at the end of the day, basically you're getting the performance as named. Now, you did note, there are some of these ETFs out there that don't get full performance coverage through a swap. They're doing it through options, they're doing it through futures. It could be they don't have the relationships, it could be they just don't have access to the banks. And you're seeing, and we saw the headlines, some of those ETFs not able to reach the beta they want to perform. So for the direction lineup of ETFs, we make sure we're hitting the performance.
Is that an issue, not getting the performance?
It is. So he's not going to refer to his competition, but we've seen some strategies.
But you can.
Yeah, but he can.
We've seen MicroStrategy is a stock that we have single stock leverage ETFs. And that's not a large stock. So it's not Apple, it's not NVIDIA. And so we did see some of those ETFs that were leveraged tied to that. They couldn't deliver that exposure through a swap. They had to use other means. That offers a different experience for the investor. So it's important to also know who is behind the firm, behind the ETF.
You got to do a lot of homework here. What happened to just buying the S&P 500?
You've been saying it for years, right? You've been saying it for years. It's about education. That's right. This is about education, Bob. I mean, you've said it for years. We'll say it again. You need to learn about how these ETFs work. You need to understand daily leverage. You need to understand the daily reset. We provide a lot of this education on our website, directionetfs.com. Vetify does as well, but you're right. You need an investor that's out there that's not an institution, they're not a hedge fund. They need to go and learn exactly how they work.
But it's become even more complicated. So the broad S&P 500 or NASDAQ 100 or you should have more confidence in using those leverage and inverse ETFs to know that there's enough liquidity. The liquidity of the underlying stock market or the S&P 500 or the NASDAQ 100 is quite strong. It's when we get into these single stocks that are not mega cap stocks, the risk becomes
Well, you brought up
greater.
the daily reset, so here we go, folks. Let's explain the daily reset here. So retail investors have had a very hard time getting their head around these products because of this daily reset, folks. So what happens, if you don't know, they reset every day. So if you hold them for more than a day, your returns may vary wildly because of what's called compounding effects. So Todd, how would you grade the ETF leverage and inverse industry for educating investors about this critical aspect? Are people better educated than before? Remember, we used to do this 7 or 8 years ago. People could not get their head around the daily reset.
So I think investors are better educated. Those who have been using these products are better educated. Doug's firm, other firms that are established within this space have done a good job of educating, and on their website you can be able to see that information. The challenge I have is that many folks are not visiting the website of an asset manager, or they're not visiting our website where we have education content. They're just going onto their brokerage account or on their phone even and just buying something because it is a single stock leverage ETF and thinking they're going to get 2 times the return of NVIDIA when NVIDIA reports results today. It's a little bit more complicated than that. And so before you buy anything, go to the fund website, see what they'll tell you.
Yeah, I want to give you all, this sounds very difficult to get your head around, but I want to give you a very simple example of how it goes different than your expectations. So let's take an example of you put $100 into the S&P 500 over 2 days. We have a full screen that explains. Say it's $100, and say one day it's up 10%, and the next day it's down 10%. So on $100, on the end of the first day, you have $110, right? And then it's down another 10% the second day, and you have $99, okay? So there's a typical example of what would happen if you would think that you're just owning that. Now, if you're 2 times leverage, you think you might be down 2% there, but in fact, it doesn't really work that way because of the compounding effect. So here's the $100. Here's what you have 2 times leverage. At the end of a day, you have $120. If you're 20, move 10% in the S&P 500. If you're leveraged 2 times, you have 20% return. So now instead of 100, you have $120. That makes sense, right? Now let's just say the next day you're down 10%, and instead of your loss is 20% because it's 2x. So you actually have 120 times 0.8, you have $96 here. You would think that you're supposed to have $98 if you're down, but you actually have $96. This is an example of compounding, and it gets fiendishly more difficult. This is the simplest example I could come up with. It gets fiendishly difficult when you go into several days. So this is a simple way for you to understand. It doesn't necessarily work. And when the momentum is going in your direction, you're fine. When it starts getting choppy, then things get really weird if you hold it for
That's why it's so important. I mean, you look at the name of every single one of these ETFs, they say daily in them, and it's so important. I mean, education is key. Every investor that's using these should know exactly how they work, and they should be looking at them every single day, hence daily.
Yeah, so the point here is essentially, Todd, that these ETFs can systematically underperform over time. This is what we're trying to get across, folks. The other issue is as you heard here from Doug, they need to use derivatives to get their leverage. So in some cases you can have things like options decay, futures need to be rolled over. This is why it gets really complicated to sort of explain this to people, have them understand what kind of products they're getting. The one thing that's encouraging to me, we were talking to my friends at Granite Shares, they said 30% of their fund turns over every day. That's a sign that people aren't sitting on this for days and days.
Right.
I think the education may be getting better. That's what I'm trying to get at.
That's right. I mean, you know, it's hard to see all the data, but everything we see tells us the velocity's there. You in this type of ETF, you would expect a lot of turnover, a lot of velocity of holdings, and that's what we're seeing. But again, education is key. Daily reset, daily checking. Come to directionetfs.com. Learn how they work.
And
give
you
us
have
a call.
You have an explainer on your website.
We do. We have a whole education. We've got a series of resources. We also sponsor a channel on Vetify, so vetify.com, another place for education. But reach out to us. We're friendly people. We'd love to get on the phone and explain how things work.
And your concerns seem to be not so much in the index, but single stock ones. And what your advice again to people concerning single stock ones is?
Well, just go and look at how the fund has performed on the website in that period of time before you purchase it. And is that experience what you would expect it to be? If it is, and you're comfortable with that level of volatility, then it could be for you for the day.
Is there any situation, I know I'm putting you on the spot here, Todd, but is there any situation where this could be a systemic risk, where all of a sudden it's NVIDIA's earnings and there's massive positions in this thing? Could there be a systemic problem somehow? Remember the volatility ETFs of 2018?
Right. So I'm not concerned about NVIDIA. I'm concerned about those smaller stocks if there becomes increased popularity in getting exposure using single stock leverage ETFs. Then you have disproportionate share connected to one ETF and connected to the leverage behind it. That could be a greater risk. NVIDIA, the amount of money that is owned by ETFs in general, let alone leverage and inverse ETFs of NVIDIA, is still quite small. I'm not concerned about earnings coming up this week.
Yeah, I mean, we've talked almost all bull case here, but it's also important to talk about bear cases. We saw a market sell-off on Friday. A lot of investors are starting to look at the inverse ETFs. They're -1 ETFs in the direction lineup, right? So you're not necessarily dealing with the leverage factor, but it does give you a way to remove exposure without taking some capital gains. And when you look at the Mag 7 stocks, I think 6 of the 7 right now are down this year. There are individuals who are saying, how do I hedge my position? And inverse ETFs can be a way to do it without leverage.
And of course, all of this is really a manifestation of risk-on behavior that we've seen. We've seen more explosion in options, zero data expiration options. This is a sort of a manifestation of the I won't call it a speculative fever. I just did, but that's been out there, right? I mean, it's not just an isolated case here.
This is a risk-on environment for investors in general. ETFs are providing access to that risk-on nature, or in the case of what Doug is talking about, the risk-off nature. So you can certainly short an individual ETF yourself, or you could use an inverse ETF, which is easier to be able to do. And so Douglas's firm Direction offers that as an opportunity.
Yeah. So folks, I know we've been a little nerdy here today, but this is what I call the educational opportunity to explain people. These ETFs are getting more complicated every single year, and our job here at ETF Edge is to help explain that to you. We don't necessarily have strong positions one way or another. I have a few thoughts on this, as you probably know. I've had concerns about this particular brand of ETFs over the years, and yet we see more people interested in them. So what we can hope to do is educate people about the pitfalls, about the advantages and the disadvantages of them. That's, again, what ETF Edge is here to do. Thank you for joining us. That does it. for this week's ETF Edge. My thanks to Doug and Todd. We have asked Todd to stick around and provide some additional insight into other recent ETF trends. There's a lot of other things going on here, folks. That's coming up on the ETF Edge podcast. And remember, you can see all of our shows on our website, etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.